Okay, I think we can get started. Publius and Chad, how are you guys doing?
Not too bad, Mod. Busy week on the farm for sure.
I can only imagine. How's it at your end, Publius?
What's up, guys? Doing well.
Glad to hear. All right, we're gonna kick off this class maybe with a quick summary, given that even the first question maybe is kind of related to that. Earlier today, we had an announcement about an emergency BIP, and that's kind of related, or they're both related to BIP 29. Chad, since we have you on stage and Publius as well, maybe can either of you or maybe both of you summarize the emergency BIPs, and then what are the changes that what does it impact, first of all, the protocol now, and then what changes can we expect to maybe fix them?
Sure. Maybe Pubs, you want to kick off with the explanation, and then I can talk about moving forward.
Feel free to just go ahead, Chad.
Sure. So I guess to give a quick overview of the two emergency BIPs that have been executed since last class. The first was due to a bug in the pod marketplace, which was identified by a white hat, which was related to cancellations of V1 pod orders. So the original pod orders that existed in the market. There was some behavioral changes to the market that occurred during BIP 29, and this particular form of cancellation was not correctly accounted for. So the BCM moved to remove the cancellation, the pod order canceled function from Beanstalk. And in addition, when we received this report, we also removed a number of other market functionalities from the Beanstalk UI temporarily. So some of those functionalities, I believe, including listings as well, are still taken down. But we're currently evaluating, the state of things and when to re-enable those. I think it's a little bit unclear right now exactly when the V1 order cancellation will go back up, but we're going to take a look at the market side as soon as possible, at the rest of the functions. And then with respect to the EBIP that was announced today, there was a vulnerability in the transfer token from function, which is one of the functions that Beanstalk uses to enable other protocols to interact with Beanstalk balances in the farm function and otherwise. And this vulnerability was related to how Beanstalk tracks the allowance of transferring certain tokens. And so more details about that specifically are available in the announcement. But yeah, I mean, happy to answer any other questions about those things.
Thank you, Chad. And maybe can you give us a summary of did any of these bugs get exploited? Where are we standing now?
Yeah, so with respect to the bug in the pod marketplace, it was discovered when a V1 order was canceled and a user received more beans back than they should. They were expecting to receive about 1,000 beans. I believe they received about 10,000. Those beans were returned to Beanstalk, so they're appropriately back where they should be. And then the white hat will receive payment through the Immune 5 bounty, which they submitted. And then with respect to the transfer token vulnerability, we've been unable to identify any cases in which this was exploited, and have done I think Breen in particular has done a pretty thorough review of on-chain activity related to this so far.
Okay, great. And then what are the next steps?
Yeah, so with respect to the market side of things in particular, we're going to look at re-enabling the UI's functionality for components of the market that were taken down out of an abundance of caution when this bug was identified. And then I believe also there's work in progress to fix the vulnerability basically make a new version of the order cancellation function. I'm not quite sure exactly when that upgrade would go out. So I don't know if Publius happens to have that answer on hand.
Thank you, Chad.
Not at the moment.
All right. Publius, maybe now we can, or I wanted to spend a few minutes to discuss, some of the thoughts, behind maybe audits and security. So, the community and let's say the contributors and all, the prudence has, went up a lot, let's say, after the exploit, and we've been very careful with pushing code before it's checked and checked again and audited, and the contract has already been audited, and Harbor is re-auditing Beanstalk and all. It just reminds you back again, or takes you back again, that the only test, or the real test, is the test of time. What are your thoughts about that, Publius? What can be done, or what's happening with it, and how should the community, or let's say the DAO think about these things?
So currently, Beanstalk is exposed to existential risk in a variety of different forms, one of which is smart contract risk. Now, it has to be said that Beanstalk has a significant amount of economic risk at the moment, from the perspective that currently all of the liquidity trades against 3-curve, which is basically a least common denominator of DAI, USDC, and Tether. But more than that, the protocol itself is perhaps it's in a state where it could continue in perpetuity, but perhaps not. And there's a lot of economic improvements that likely should be made to Beanstalk that aren't particularly well defined at the moment, but are hopefully going to be able to be made through collective discussion. Everyone can figure out what needs to actually be implemented, and then they can ultimately be implemented. And it's the economic existential risk never really disappears from a system like Beanstalk, but there is a question of, at the moment, there are much clearer economic existential risks that can be mitigated, as opposed to the big question of, is a credit-based stablecoin even possible, which is a separate question. And in short, we're therefore collectively towing a fine line between pushing too fast, such that there are problems introduced, and BIP 29 introduced a variety of different problems, but balancing that with moving swiftly enough such that all of the existential risk that seems to be time sensitive or potentially time sensitive is mitigated before the time comes, let's call it. So with that in mind, felt like the conversation earlier this week on Wells was very constructive and hopefully helpful for people to understand where we view a lot of the existential risk and where we're trying to spend our time mitigating existential risk. But frankly, the implementation of the gauge system hopefully will significantly reduce existential risk. And then on the other hand, you have things that are potentially introducing existential risk, like new projects launching on top of Beanstalk, audited or unaudited, and lots of new code being deployed. So on the one hand, there is some question of solidifying the base layer of Beanstalk, but let's say there's some hot protocol that attracts 40% of the liquidity in the protocol, and that gets hacked. Even if Beanstalk hasn't been changed in years, that could be a big problem for Beanstalk if the hacker or the exploiter decides to take their liquidity and leave the system. So in the case of like the DAO hack on Ethereum, for example, it really is a fundamentally different thing because the Ether can't really leave the system. Whereas in Beanstalk, the value that is stolen can leave the system. And so there's just a lot of difference. The situation that Beanstalk finds itself currently and will continue to find itself in, from a risk perspective, it's very serious. And in order to get to a place where A, the base layer, and B, all of the protocols that implement the derivatives and other core products, let's call it, on top of Beanstalk, all of those really need to also get to a place where they're relatively solidified in order for things to become safe over time. So there's lots of layers of risk, and yeah, it's scary stuff, frankly. And there's not much to be said than perhaps the short-term timeline should get pushed back, where the existential risks not associated with smart contracts are downgraded to even further reprioritize smart contract risk. And it is worth saying, to your point, Mahmoud, that the process around pushing code has gotten so much longer and thorough, and with many more parties and eyes involved before pushing anything on the chain. And still, there are problems, and still there are bugs, and still there are potential vulnerabilities. So, in practice, it goes without saying, but it's good to say nonetheless, there is no test like the test of time. And that's going to apply for Beanstalk, and that's going to apply for protocols on top of Beanstalk at the end of the day.
Thank you, Publius. And you've highlighted a few things that maybe I wanted to ask a bit more. So one of those things is that, the bean economy is expected to grow, let's say, or will grow. And then you'll have different protocols, building things on top of Beanstalk. And the expectation is then silo depositors or bean holders will be able to do, different things, let's say, with those protocols. How do you think the DAO is to think about, about this, let's say, ecosystem or economy in it all? Is it up to the DAO's interest to also protect, those other protocols that utilize beans, just given that this is, one economy at the end?
Well, there's a couple different things here. There's largely a tragedy of the commons problem, where if the DAO decides as a collective to completely take on the cost of securing other contracts.
Sorry, Publius, I think we lost you a bit. Maybe we can start. You can start again with the answer.
Can you hear me now, Maud?
Yes.
All right. Sorry about that. So
No problem.
There's a little bit of a tragedy of the commons problem here, which is that if the DAO decides to take on the cost of securing via audit or multiple audits every piece of code that's going to touch beans or use beans, and have bug bounties, that the developers of that code, particularly in the pseudonymous world, could introduce bugs intentionally and then try to report them or take advantage of them and then expect the DAO to cover it. So there's some weird, I wouldn't call it liability questions, but incentive questions around what the DAO should be doing and what's prudent. But frankly, feel like the big thing is going to be, as a culture, not to use protocols that haven't been around for a long time. And Beanstalk was around for a pretty long time before it was exploited. And Beanstalk has had vulnerabilities since being on it. There is no single rule of thumb here on how security should work. And yeah.
Sorry, Publius, we started losing you again. Or you're muffled in and out, let's say.
Sorry about this, Mod. Let me try moving somewhere else. Not sure exactly what's going on, but Was my answer clear, or did I lose you in the substance?
Yes, I think the piece of advice, let's say, that you said is that users or holders of Bean, they will want to use protocols that have either been sufficiently audited or has been around for some time.
Yeah, but at the end of the day, neither of those two things are guarantees of security, as we've seen with Beanstalk.
Yes, and that was the other thing that you have highlighted. There are different kinds of risks. So there are the risks where the protocol doesn't do what you expected it to do, and that given maybe there were some loopholes or bugs or whatever that caused it. And then the other bit is the economical risk, where the protocol behaves as expected and everything runs fine, but hey, the experiment didn't turn out as expected, let's say.
Yeah, and at the end of the day, it's up to every individual user of Beanstalk to determine what makes sense for them to use and experiment with, and how much capital to put at risk. And it's as always, Beanstalk remains an experiment, and if anything, the experimental nature is increasing, not decreasing in the short term, and that does introduce significant risk.
Okay. All right. With that, I think we can move to the next topic, unless anyone in the audience wanted to discuss any of this more, or even at a later stage, just feel free to drop questions in the town hall chat. Publius, I wanted to talk a bit about the state that the protocol is in right now, and now let's talk a little bit about the economics of it. So we see what's happening with the overall, let's say, market and the crypto market in specific. Beanstalk seems to be very fine, or pretty healthy. The protocol is minting, and continuously, let's say, hour over or season over season, or throughout most of the seasons, let's say. And then the majority of farmers are not selling any of those beans that are getting minted. What do you think that means? Is this some sort of, let's say, like an upper limit for Beanstalk? Does this show or maybe signal that the protocol in general is undervalued, just given that the number of beans are increasing and then the holders are holding to it and not selling? Does that not signal that, or what do you think?
Well, it's hard to say about the value, but what's clear is that there is no or minimal supply of beans below $1. People are not willing at the moment to sell beans below $1. And anytime that people have sold beans below $1, there seems to be decent demand to convert. There seems to be less demand for soil, basically no demand for soil, which is interesting. And as Beanstalk becomes more sophisticated as an economic system, the balance between the temperature and the convert incentives, that's something that will definitely it will make sense to look at fine tuning that, because it's clear that right now all of the demand is coming from convert and not from demand for soil, and it's unclear how sustainable that is. And the liquidity to supply ratio is something that the protocol can perhaps use as an indicator of that, but that's not necessarily the most important thing right now. The point is that for the moment, there's not a lot of supply below $1. There is demand from convert mostly below $1, and there does seem to be some, let's call it a margin above the peg, above $1, a delta B above $1, where there's minimal selling and converting happening. So it's not just below the peg, it's actually below something like 1.0002. Now, granted, because of the curve fee, which is 4 bips, I believe, that doesn't necessarily, it's not surprising, because there's some friction around selling beans above $1. For less than 4 bips above $1, you're still getting less than $1. So it's unclear how much real demand there is above $1. Particularly, it seems like the majority of activity or demand above $1 is from a single automated wallet or bot. So it's not necessarily the most it's certainly not the most growth that Beanstalk has seen in its past. But if you take a look at the charts on the forecast page, for example, and you look at the all-time market cap or all-time bean supply, I guess that's on the bean supply chart is in a different spot. But even the market cap, you can see that this period isn't dissimilar from some of the earlier periods in Beanstalk from a size and a relative stability perspective. There is no ETH volatility factored in here, so that's largely why it looks a lot flatter. But otherwise, this is neither here nor there from our perspective at the moment. But lots of interesting data and continuing to just observe and learn and try to think about the model as much as possible on this end. But generally, not too much to infer or learn from the fact that there isn't particular activity above or below $1 at the moment, other than not a lot of supply below $1 and demand below $1.
Okay. And I agree with you on the dollar, I guess, on the bips on it, on that you're not really selling a bean for $1. But just given that, let's say, the seigniorage is accumulating, so it's true that you may not get $100 for the 100 beans, but it's still 100 beans that you've gotten through seigniorage or interest. And I think it's pretty interesting to find farmers in general holding. And maybe that has been reflected as well in the prices of unripe on the secondary. It seems that the secondary valuation for unripe assets has also increased the past few weeks. And I find it baffling, to be honest, that in this market this is happening, and it's quite a bullish sign. Okay, Dumpling says, have you been surprised by anything post Replant, or is this about what you would have thought? Would you be curious to hear? Okay, yeah, he's curious to hear what you think about that, Publius.
Well, on the one hand, Beanstalk is moving along relatively nicely post Replant, and the economic situation of Beanstalk is generally in line with our expectations. The majority of fertilizer sales happened prior to the Replant or shortly after, and there hasn't been much interest since. That was expected. There was a decent amount of a sell-off and overhang shortly after the Replant because the system was replanted above $1, so there was some minting there, and there were even some significant inflows after Replant that then left, and that exacerbated it. But generally, the overhang was A, not particularly large, and B, the system responded nicely in general. It was quickly repegged in a way that it really hadn't before due to convert. So that was interesting. I think a lot of that was from the fact that all the liquidity was locked at that point, which still remains the case to some extent. But Beanstalk seems to be, from a base level, doing pretty much in line with expectations. I think the main surprise to us is the amount of activity happening around Beanstalk, considering that it was replanted 3 months ago or so. Is that right? September, October, November. Yeah, 3 months. So, in short, there's a lot of crazy good stuff happening around Beanstalk, and that's perhaps the thing that's most surprising to us.
Agreed. I'm pretty excited to see the things that has been happening on the inside come basically be deployed and the rest sees it. Deckers asks, would there be any way to show an APY on fertilizer?
So not sure if Cujo is here, because know that they were working on that. But can talk a little bit about that. So the idea, it's definitely possible. Now, things don't map exactly like the silo, because unlike the silo where you can withdraw your capital and sell your initial deposit, when you buy FERT, you forfeit any sort of rights to the underlying, and therefore the rate of return is easy to calculate. But if you're trying to annualize that and factor in the loss of capital, it's a lot less clear. So the current thought, I'm not sure exactly the status on the implementation of this, but the last that we heard on the discussion of this was that the idea would be to determine, based on the current minting, how long it would take for the entire fertilizer to be paid back, and then basically normalize that to a year. So if the rate of return on the fertilizer was 20%, and based on current minting, it was expected that it would take 2 years to get there, the APY would be, and I guess it's not exact, but it would be something like 10%.
And CytoChat confirms that Cujo is working on the FERT APY. Okay, I see Dumpling is typing a question. Let's wait for that. All right, Dumpling follows up and asks, would you be happy or interested if things were actually happening slower? Since liquidity is mostly still locked, maybe existential risks, could be reduced a bit.
Not sure happiness is really the thing to optimize around, although to answer the spirit of the question, it's really hard to say. There's a lot of really cool tech to be built, and frankly, there's no rush to build most of it, because someone else builds it, great, it can be forked, and if not, at some point, the Beanstalk community will certainly get around to it. But think that at the moment, there really is a balance between pushing new products and things that create utility for beans, and purely focusing on things that minimize existential risk, like wells and the gauge system. And it's a fine line. So perhaps, like all things, it'll oscillate, and the focus goes back and forth between core Beanstalk functionality and lots of stuff being built on top of Beanstalk. To our earlier point about being surprised about how much stuff is being built on top of Beanstalk, think from our perspective and Beanstalk Farms, a lot of work has gone into supporting the ecosystem as opposed to working on Beanstalk directly, and a lot of that's great, really, really great. But there's just a need for more resources, and everything comes at the margin, and will continue to come at the margin. And yeah, it's not a question of necessarily moving slower as continuing to move deliberately. And feel like at the moment, one thing that is tough is there isn't really a roadmap, and there is a Notion file, which not sure how public it is, although we've been trying to get all of the Notion stuff to be public, but we've been trying to put at least our thoughts into a little bit more of a rigorous timeline and form, but recognize that there isn't necessarily the most direction in terms of a roadmap or anything published recently. And nonetheless, it's kind of amazing the amount of coordination that is happening almost without explicit coordination. It's just all happening, where lots of things are lining up together. And Therefore, you almost can't. It's hard to say that things are being rushed, but it's also hard to say that things aren't moving very fast. And so, what does that really mean? It means that the thing that can really probably be improved is the process. And maybe the question is really how much time should be spent optimizing the process as opposed to building things, and not to move faster or slower.
I think no matter, really how slow, even you want to slow down yourself, you still find yourself pushing harder and wanting, to move fast. Brian just said it's crazy that it's only been 3 months. It feels like 5 years, and it really does feel, maybe not 5 years, but it feels like a long time. Things in DeFi moves fast, and I think the DAO in general here holds, holds everyone to a high standard and expects, more and more. And brings us back to the initial discussion that we have, is that we're moving fast, maybe too fast, for our own good. But no matter what, this is I think the spirit of what Beanstalk is, and the people behind it, or the DAO behind it. Okay, I think Dumpling concurs and says he agrees about the process. Okay, let's give it a minute or two. See if others have questions. Whether it's something that we discussed or something else that has been in your mind, please feel free to drop it in the town hall chat. Okay, we briefly discussed the 2 emergency BIPs earlier this class, EBIP 4 and 5, and Guy just posted an announcement on EBIP 6 that's meant to resolve those 2 BIPs. Guy, do you have a minute? You can come maybe on stage and give us a summary of those BIPs, or this BIP.
Sure. Yeah, I don't mean to derail class by any means, but figure we should share as soon as possible after the transaction is executed. So Silo Chat, I think, pretty adequately addressed a couple of these, but essentially EBIP 4, or the bug that resulted in EBIP 4, was related to the fact that Beanstalk was storing essentially the number of pods ordered for every pod order rather than the number of beans locked. So was returning farmers a proportional increased amount when canceling their pod order rather than the number of beans they locked in the pod order. And then with the EBIP 5 fix, which was related to permits, I mean, at a high level, a lot of Beanstalk functions have a parameter that allows you to decide what balance you want to pull a farmer's assets from, whether that's their farm balance, their circulating balance, or some combination of the two. And so the fix in this case was simply to enforce that only internal or farm balances would be used by that function. The vulnerability was in being able to transfer assets from another farmer's external balance if they had approved as such. So those are a couple of things that were fixed in the EBIP, and there's a write-up in the announcements channel. So feel free to check that out, and happy to answer any questions.
Thank you, Guy. And then I guess the next step is for that to be reflected on the UI. Is that correct?
I think that's probably a question for Silo Chad, or I think Beansama might be working on it. But yeah, I think the idea is to get that back up as soon as possible.
Okay, thank you, Guy, for the update. We are at the end of the town hall chat or the questions. Let's maybe give it a minute or two, see if others have questions. Otherwise, we can end this class. Okay, thank you all for joining us. And Publius, as always, thank you for taking the time to answer these questions. And we'll see you all next week.
Take care, man.